Okay, good. Thank you. We have our daddies and mummies and our everyone joining us today. So thank you all for coming. We appreciate you for putting this time to invest in yourself again. So, all right. So let me remove or okay. Let me do this like this. So cardinal questions, the main questions we said we must always ask ourselves before we take any trade. Because what we want to do is that we want to build consistency, right? We want to build consistency over a period of time. We're not interested in, for this 2026, we're not interested in just taking one or two trades and winning in just one or two trades. All through the year, we want to be profitable. We want to be consistent. We want to continually see that progressive, positive move. That is why we must be conscious and we must be aware of how we are trading, right? So we said the three questions we must ask ourselves every time. First question, what did price do overnight? Very, very important. What did price do overnight? Then second question, where is price now? And then the third question is, what must I see price do before I execute a trade? Before I enter a trade, before I place a buy or a sell? What must I see price do? So that process helps your mind to have a pattern, to follow a particular pattern always. So that if you say that, oh, I am seeing a trend, then you know that if you say you are seeing a trend, let's draw this one like this now, right? You're seeing break of structures, you're seeing break of structures, and price is right here. Then you know that, okay, I'm expecting a pullback and then a continuation downwards, right? Very simple, very nice. If it's a range, you say, okay, since it's ranging, I'm not interested in trading in a range. I want to see a breakout, I pull back, and then I'll enter the market. Or I want to see a breakout to the downside, and then pull back, and then I enter the market, right? So we don't want to be, we don't want to trade haphazardly. We don't want to trade like, somebody who is just gambling. No, we want to be consistent. We want to take calculated risks. Everything has risk in it, but want to take calculated risks, right? So let's okay, let me remove all these ones now. I can remove all this now. Good. So we ask ourselves, what did price do overnight? So let's look at this. Price started from somewhere up here, push down. This is gold, 30 minutes charts, push down, push back up, push down, nice break of structure. A push back, came back down, maybe a small, no. Well, this, I won't consider that one a break of structure. I usually like a body break, right? So this is just a push down. And then it pushed back in very deeply, right? It just wicked this area. Okay, that's why sometimes I say, even if your area is right here, just give it a bit of gap, right? So maybe you could have taken this. That's for those who were trading London session, right? But anyway, let's look at what the price do overnight first. So price moved all the way back in, and then it's back here now. Okay, so what do we want to see price do before? So price is trending downwards, right? This is trending downwards. So where's our last valid range? Our last valid range is right at this low here. So if we take this low here has not yet, well, it has wicked this area, okay, but it has not broken and closed below with a body break. So this area is still very valid. And from this area here, if you go backwards, our last valid range was actually here, but this time around, you see it's broken it up there. Okay, so if we draw a nice one now, so this is something like this, it's pulled back in and it's come back down here, right? So the second question is, where is price? Price is right here. So what must I see price do before I execute a trade? So a possible scenario, I can see a pullback and then continuation downwards. That's a possible scenario. Or if I see price push all the way back up and break and close above this last high here, because this is now a swing high right here. So if it breaks above this swing high, that will then be a market structure shift. Okay, so we're waiting to see what price is going to do. If it breaks below this level here, then that could give us an opportunity to actually take a sell. If it breaks and closes below here, then we can just wait for a small pullback and then go with it, right? In that case, we can actually put our stop loss somewhere here, okay? Or if you like, put it up there, right? It doesn't really matter too much. The important thing is that you are following the same process over and over and over again. Okay, let's look at the next pair, pound yen. Okay, so pound yen, let me remove this. We had something there, so let me remove all this. So question, what did price do overnight? We can see price pushed up, pushed back down, broke structure here, break of structure to the downside, pushed all the way down, right? It started pushing up, did a market structure shift here actually, right? A market structure shift right there, right? But it looks like it's not going to be sustained, okay? As long as it's above this level here, then we're still, it's done a market structure shift. So we're fairly, just a little bit bullish, right? But if it then breaks this level here, which looks like it may actually do that, if it breaks this level, then we can look for a short, okay? If we ignore this market structure shift here, then this will just be a nice break of structure, and all this, you consider it as a pullback, okay? And then you can now enter for your shorts there, okay? So 1,001 ways to look at the market, but if you follow a consistent process over and over again, you will see that you will get your trading process your trading will actually improve. All right, so let's look at the next pair. Euro yen. Okay, what did price do overnight? Price pushed up initially, came back down to this level, broke structure here, right? It pulled back in, eventually broke structure to the down here, to the lower side here. See this break close below here. Then it pushed up. It just pushed up all the way up. Okay, we can, if we want to be very, very granular, yeah, you can say this is a market structure shift here, right? Market structure shift. So you're expecting a pullback and then for it to push up, right? So right now, what do we want to see price do before we take a trade? I would like to see it break below here, and then I'll go further down, or as long as this is still intact, this high here, right? As long as that is still intact. Mind you, okay, so sometimes, good. So this is even a good learning point. Sometimes, so if you ask yourself, what pushed market to this high here? If you look backwards, you will see that this was the last swing down here that pushed market up, came back down, then pushed up again, right? There was a small pullback here as well. So if you want to be very conservative, right, you can say, okay, I'm expecting, as long as this low here is not breached, then I'll still be in looking for opportunity to buy. However, okay, this is where your trading professionalism comes into place, right? However, you can say, okay, I want to be very, very aggressive. So if I see it break this swing here, because what you expect, let me draw this this way now. It has done something like this, a market structure shift. Okay, it's done a market structure shift here. So you're expecting it to come back down and then go back up. However, if it comes down here, does this, and then breaks this level here, that'll be another market structure shift, right? So you can take that trade and say, okay, I'm looking for it to come down to these lows or eventually to these lows here. So the same thing here. Once it breaks here, your first target will be these lows here. Let's see if it's come all the way back down to these lows. And then if it still pulls back down and then goes down, then you can look for further movements downwards, right? So it's always you have to look at it with your trader's mind, with your professional trader's mind, with your traditional trader's eye, so that you can take appropriate um, trades that way. Okay. With managing your risk, of course, managing your risk. In fact, I'll tell you in the premium group, I told our people there that I wasn't good because I took this trade. I took a buy initially, right, on pound yen and euro yen, um, because of this nice bullish engulfing candle right there. But I got stopped out, right? Then eventually I saw it moving up, and I said, well, I was not going to take any more trades on that particular pair. And on that account, because it was a prop firm account, and I had set my target that if I'm down 1.5%, if my risk for the day, if I'm in a drawdown of 1.5%, I won't take any more trades on that particular pair, right? Sorry, I won't take any more trades on that prop firm's account, right? And that's what I did. So you have to manage your risk. Even if you see another opportunity, you have to just close your eyes and say, I'm managing my risk for each trade. So I want to see my capital grow over time. I don't want to blow it out, right? Okay, so let's go to the next trade. This one, pound Aussie. Okay, what did price do overnight? Price initially went all the way up, came back down. Nice break of structure there, push back down, another break of structure, and then a push up, push down, push up. Eventually, he's done some sort of market structure shifts right now. So it's looking more bullish here than bearish. Okay. So it's done a push up. So we're looking more bullish right now. So if you ask yourself, so second question is, where is price now? Price is right here. And what caused price to be about at this level here? This was the last swing low down here. Okay. So if you say to yourself, I want to either see price break below, then I'll go low, or I want to see it break above this last high here, break above this high, then I'll go higher with it, right? I'll take a buy. Okay, so you have to just look at it. So it's just nice and simple, repeating the same process over and over and over and over again, right? That's how you make good profits over time. This is Euro USD. Okay, what did Euro USD do overnight? It pushed up initially, pushed back down, came back up here, then broke structure to the downside. Then it had, so our last valid range was down here, and then through London session, it just essentially did a big push down because this is our last valid range between here and here. Okay, and then now it's pulling back. So we want to see it's actually trying to give us a swing low there, but let's see if it breaks below it, then it won't be a valid swing low anymore. So we have to wait for this candle to close. Okay. But other than that, we are seeing bearishness. So this is the last break of structure, a pushback, and then we want to see it come further down to these lows and then continuation downwards. If not, if this swing low here holds, then we want to see it break this high first. Let it break that high. Then once it breaks that high, then I'll look for a possibility to continue trending upwards. So I'm very, very conservative, very, very conservative. If you want to be more aggressive, you can actually take a buy right here, okay, based on the premise that, well, you have a nice bullish engulfing candle, you have a push up here, and then you want to then do that. That would be an aggressive move, right? So that is also possible, but we don't want to, I want to be very conservative, mainly because I've had, anyway, I'm not even trading Euro USD, so don't worry, no issues on that. But if Euro USD is your pair that you like to trade, then you look at the risk and see if you want to take that trade. Pound USD. Very nice. What did price do overnight? It pushed up, came back down, pushed up. Nice move downwards, break of structure there. And then it's done a nice move up, which is more like a pull back. Right now is weakening this level here. Is on a weak, is giving it a small wick here. So let's see if it closes below here, then that'll be a nice one to continue going short. Okay, so wait for it. Wait for this candle, let it close. Do not enter right here for a sell because we can get markets that will just start moving upwards in the other direction. So wait for it, let it close, then you take a decision. If it closes below, then very good. You can then look for opportunity to go downwards with it. But if it ends up like maybe a nice bullish engulfing candle, then that tells you that there are some buyers in there, right? If you then want to take an aggressive buy, you can then enter for a buy to see if it will come up to these highs first and then to these highs. But if you want to be conservative, you wait for it to break this high first, then you wait and then you go with it. Okay. So we want to be very conscientious how we're trading this year, right? We want to be very conscientious. USD JPY. Okay, for USD JPY, what is price doing? We can see a nice break of structure here, and then another break of structure, and a very nice pullback, and it's just been ranging here. So what do we want to see? We want to see it break above and close above, pull back, and then go with it, right? Or break below here, and then break below, close below, and then we can go further down with it, right? So let's watch and see what price is going to do there. Let me show you, let me do this. I want to show us something on, it can be on any pair actually, but let me go to the weekly chart. Okay, let's bring this one down. I want to show us something. Where is 2025 January? This is May. Okay. It's just a thought for it to see. So this is February, January. January is around here. Okay. Let's assume this is January 1st around here. This is January 20, December. All right. Let's just assume, right? So look at this. If you had known, if somebody had told you as at January last year that price was going to start from somewhere here, push down a bit, and then for the rest of the year, go all the way up, would you be interested in buying this currency? Definitely, if you knew that, right? So now you have another opportunity. Okay, price is currently now right here. Let's put, this is January now. This is January. We're in January here. Okay, so what is price going to do overall this year, right? Question, is it going to start coming back down, or is it just going to pull back and then continue its upwards direction, right? So you will always have opportunity in the market, but what you have to do is to position yourself according to your trade plan at all times. Position yourself according to your trade plan at all times. Because if you take any pair at all, look at it over the whole period of last year. In fact, I shouldn't even go to gold. Just for the sake of argument, let's go to gold. You see, look at gold between last year and now, right? It just moved massively up. If you just bought right here and just left it, you'll have made some huge profits, right? So all we are saying is that follow your process at all times, because you never know what the market will do really. Okay, so follow your trade process every time. So let's go back to our 30 minutes chart and then just say, okay, do we have any questions? Okay, we see it's breaking it down now. It's going down. Okay, good. We are well past our 10 minutes, 10, 15 minutes. That's good. Okay, so we'll close it here and then we'll be back next week. No more. Oh, okay, there's a question. Yes, please. Let me unmute you. Ask to unmute. Okay. Yes, please go ahead.
Yeah, good afternoon, sir. Good afternoon, everybody. Thank you for your effort. Thank you for this your free will training.
Yes, ma'am.
Please, my question is that please, I don't know if you can quickly go back to here. This is the chart, this gold chart.
Gold, okay.
I noticed you made mention that if we allow the breakout on this last dot where this green candle of this last dot. If there is a breakout, we can take a trade from there. But
Yeah.
why not the one behind it? That is where I'm getting it confused. The one behind it, this green candle behind this last one on that
Right,
has dots.
this one.
Why don't you wait until we have a breakout on that behind one before taking trade? You said we can take our trade.
Oh, you mean okay? If not okay, breakout of this one here, of this particular.
No, I mean this one that has dot on top.
Oh, right. This okay. This one here, or this one.
No, the one next to it. Yes.
Okay, this one.
I said, why not this one that you indicate arrow on top? Why do we have to use this one instead of this one behind it?
Oh, very good, very good. Okay, good. Thank you for that question. So, so before we saw this thing move down, you remember it was still somewhere here. So
yes,
we said we are trading. We're looking at. So look at what has happened. Price moved down, pushed back up, moved all the way down, pushed back up. Right. So when you were down here, where is your last valid range? Your last valid range is between these lows here and these highs here, right? This zone here. Let me mark it with a box. So this zone here, right? So that is your zone. So you want either that zone to be broken or you want this zone down here to be broken. Okay. So by the time price comes in here, by the time price was here, it can even decide to go back up again, but you are still within your last valid range. Okay, so it has not yet changed direction in any way. Okay, so that's why we want to wait for it to go all the way up first and then go up, and then we then take, that's the conservative process, right? That's the conservative process. In fact, let me show you, since you are one of the premium members, also you'll be the one to help others to learn this one now. So let's look at when was it? I think was it yesterday? No, it was Monday. Good. Look at this trade here. Okay. Look at what market did. This is pound JPY. Markets went up, came back down, went up, came back down. Right? Now, so where's your last valid range when it was here? Your last valid range is between here and here, up here. Okay?
Okay.
Now, during New York session, right, we saw price come all the way up, push back down, push up, push back down, push up. And then we said, okay, our last valid range is still here between these lows here and this high. That's our last valid range. And then we said, in case price then comes up all this way here and breaks above this high right here, then that will be a market structure shift. Then we can take a buy, right? Even though this is still the last valid range, we can take a buy right here and then go up with it. Okay. And thankfully, price actually, the market gave us that continuation and it went up. Okay. Now, if we go back to gold, let's go back to gold and see what is happening there. Oh, I've gone too fast. Okay. Let's come back to gold. So gold, we are applying the same process on gold as well, and saying to ourselves that, okay, what's this one doing now? Okay, so we said, where is our last valid range? This was our last low before this one breached it. This was our last low, and from this low here, where's the last valid range? If you go backwards, this is where your last valid range is, down here, or rather up here. Right. So until price either invalidates it by breaking below here or breaking and closing above this zone here, then this is all ranging. All right. If it is in a nice oh, that's not a good move. If it is in a nice trending situation, you see just pull back a little bit and then just continue going downwards. But here it's giving us quite a big range. Okay, so if for instance, you want to be very aggressive, you can say to yourself that this candle here is a nice kangaroo tail, is a rejection candle, right? So if price does come above this level here, then you can take a buy. Okay, but that's an aggressive method, right? But even with that, you have to then write it down in your trade plan that this is how I'm going to be trading it. Remember, I keep emphasizing it has to be a repeatable process. It's not that today you will take a buy here, and then tomorrow, if you see this same kind of setup again, you then say, no, I'm not taking a buy again. Why? Because you don't feel like it. We don't want to trade based on feelings. We want to trade based on our trade process, our trade plan that we have already written down. Okay, so it has to be a repeatable process. Like I said earlier, we don't want to just get one or two trades, be profitable in one or two trades this year. We want to be consistently profitable. And then even if we get a setup and then price gives us a stop loss, that is still a profitable trade. Why is it a profitable trade? It's a profitable trade because we followed our process. Okay, as long as you follow your process over and over and over and over again, you know that at the end of the day, you will be profitable. Okay, you will definitely be profitable. Beautiful. Do we have another question?
Thank you, sir.
Thank
No,
you, ma.
thank you, sir.
Wonderful. Thank you, ma. All right, so we'll be back next week, Monday, 8 a.m. GMT. No, 8 a.m. WAT time, West African time, and we'll see us again that time. Have a good weekend. Lovely, lovely. Let's stop the recording.